Let's dive right in. Let's get the national average for interest rates, and then we're going to talk some about what may be moving the markets in the future. So we do have some potentially good news on the horizon that I want to share. Mortgage News Daily, 30-year fixed rate conforming loans, 6.64% today. That is up a bit from last week. We were at 6.60 a week ago. We were at 6.67 30 days ago, so we're a hair better than we were a month ago, but pretty flat. Y'all, the 30-day low was back on the 29th of June, and that was at 6.52. So we've not seen a huge amount of movement, y'all. We've seen daily volatility in rates over the last 30 days, but no major trends have been established. And it's owing to the fact that there's just not much reliable news that is moving the markets. We've seen so many bait and switch moments with Iran, so many declarations of a ceasefire agreement that are immediately violated. My advice around that would be, until the ships are moving freely through the strait, just ignore the news, because it really there's no way to get reality based on the power vacuum that exists apparently in that country, and just the inability to negotiate with anyone in good faith there is making getting reliable news very challenging. So until the ships are moving, y'all, just ignore the news. Frankly, that's what I'm doing, and I'm having a little bit of a less stressful time because of it. Here's the news that may move the market some, y'all. If y'all recall, Kevin Warsh, our new Fed chair, in his first meeting as Fed chair, we addressed this a couple of weeks ago on this video, kind of rattled the markets when he reiterated a commitment to a 2% core inflation rate. Y'all, he just said that we're absolutely going to hit it. There was no equivocating on that point. Markets didn't like that. They viewed that as a hawkish statement that the Fed was more likely to raise rates than to lower them. And it put a lot of concern into the bond markets in particular. So we saw a lot of sell-off, and we saw interest rates pressuring higher. Y'all, what we've seen now, though, when you look at the way that the Fed is being administered under Chairman Warsh, with a much tighter fiscal approach, a much more conservative fiscal approach. He did some things this week that the market really likes, and the bond market seems to be enjoying some. He has appointed a task force that is essentially an internal audit of the Fed that is promising some big changes. And one of those changes that impacts interest rates potentially the soonest is how they evaluate the data that goes into the personal consumption expenditures report, right? So the department that is responsible for that has always included portfolio management fees in that number. Well, there's an issue with that, y'all, because as the Dow has hit new record highs, those management fees obviously are going to have a much higher dollar value associated with that. That's not inflation. That's just your portfolio increasing in value, right? Now, if the rate of your portfolio management increased, let's say you're paying 1%, if it jumped to 2%, then yes, that would be inflationary. But the fact that the fee has increased because the underlying asset has increased isn't inflationary. The Fed recognizes that. They have instructed, I believe it's the BEA, to make that change and to make that correction, and that will be reflected going forward in the September numbers. Y'all, if y'all recall, we had a bit of a sell-off with the May PCE report that came in a little hotter than expected at 3.4%. Just this change alone would have brought that to 3.2%, which I believe would have been a point below expectations on that report. Again, recalling from a failed memory, y'all, I didn't look that up and I should have. So, but I believe that is the case. So it's not an insignificant change. If they continue to find places, and I'll tell you the next big one, y'all, we measure inflation using rent costs with what's called owner's equivalent rent. That's a survey, y'all, where folks are saying, what do you think your house would rent for? And they're giving a response to that. It is a terrible metric from an accuracy standpoint. It's just very inaccurate to just ask folks what they think they could rent their home for. There is a move afoot, and hopefully this task force speared by Chairman Warsh will revisit owner's equivalent rent in the future as well, because it's improperly inflating inflation numbers. If we're going to target a 2% target, let's do it with real actual data. And that seems to be what Kevin Warsh is dedicated to pursuing, y'all. And that's good news for all of us. So we will see how that hangs out in the future. Has that changed the Fed outlook? Not really, y'all. I looked at CME FedWatch tool today. there is still an 85% chance of rates going up at least a quarter of a point prior to the December 9th meeting, on or before that meeting. So we'll see how that changes over time, y'all. I think that those futures are a bit inflated. I really just don't see that big a likelihood of a hike, but I could be wrong, y'all. But the markets are betting that it's going to be there. Stay blessed. Stay safe. We'll talk to you next week.